Thursday, May 1st, market analysis. Stan Ehrlich, good morning, 9:56 California time. Just a little after the middle of the normal trading day from 6:30 to 1 o'clock California time, the regular historical trading hours. We start out with stock market indexes and go to futures. And I've added one more stock. Now I have a total of four that I'll be watching for a while. I drop them when I'm not interested in them anymore. Or I'll add something sometimes. Send me a symbol if you want. We'll see if I add it or not. E-mini has, in fact, yesterday after my YouTube rallied substantially and succeeded in closing at least around unchanged, in some cases a tiny bit lower or a tiny bit higher, but an outside trading range day and getting closer and closer to overbought. Where the next step up is now, in effect, as I alluded to yesterday, although I wasn't expecting it, if it happened, which it did, we get follow-through, which we have. So the market is up 5 points, give or take, 50 at the moment exactly, and the E-mini has made higher highs for the rally. In fact, every single day, creeping up slowly until just yesterday and today. After it washed out a bunch of sell stops below the market. That's pretty strong comeback. And it's now above a little resistance. So I'm not going to be surprised if we are not able to jump, probably quickly, up to 5,800. That will be overbought. It will be overbought at that time if it happens quickly, almost positively. Now, I can't guarantee a thing in this business. So we'll see what happens. So I'm friendly. Not bullish for maybe a few days, probably not even a week. And I'm looking for something in the ballpark of 5,800 to be in overbought condition and hopefully provide indications that it's going to start to move down and down. And I do think after this last high, it stands a good chance of going down quite a substantial amount. Maybe even making new lows for this whole trend below the early April lows. Next chart's going to be the 1 minute. So we see it pop up to new highs just recently and then settle back to a little bit of support. Now, yeah, if it breaks below 56.26, we could have a bit more of a break. I'm not sure that's going to do any damage to what I just said, unless it's huge. Next, we have an upside gap that needs to be closed. So going back to the high of yesterday for the SPY spider would be very normal. And it could happen yet today or tomorrow, very soon, and then up again, as long as it holds after it closes the gap. Can't keep collapsing. Next. And again, we've got the 1 minute chart for the spider. Looks like a little toppy thing maybe for the moment. And QQQ, also a gap up, just like the spider. Same story. Getting a little caught in this resistance area. So although we popped up above it, now we're sitting around the high of it right now. So I wouldn't be surprised if we close the gap real soon. Like I said, maybe yet today, tomorrow, soon. But it has to hold and start to come back up again right away without going too much lower. If my short-term friendly opinion, and for the QQQ, it's up to 500, is going to work. Next, simply got the 1 minute chart, and there is some recent support, a little bit lower than the gap closure area. I wouldn't call it a lot, but certainly I think enough to hold. NASDAQ, 23-hour market, so there's no gap here, very rarely over the weekend usually, but there's one down there. Holding very well, new high ground like all the others. Getting close to another resistance area so I can accept a little bit more strength. And notice, I didn't point out, but some of these indexes are now in the low 70s. This is 78.50 at the moment. It's been a little higher. And that's getting very close to my 75 overbought situation. So give me another couple days up. And then hit the resistance, get overbought, and then give me a sell signal. Next, NASDAQ, 1 minute. You can see it's hanging in there. Look at the YM, new highs, but now at the top of resistance area for today's rally. no gaps to close. But again, I wouldn't be too surprised to see a little dip. Remember, there's some others that have gaps, SPY, QQQ. Let's see what happens. If it dips down some, I don't think it's going to crash and then higher highs. We're not that close to overbought, around 66. So this has a little bit more elbow room to the upside. The upside here could be about 42,400. Yeah. Next, 1 minute chart of the YM. Nothing going on of any consequence, but if it breaks down below these lows, on all of the indexes, the low was around 630 this morning on the opening, actually. And then it could have a little bit more weakness, but shouldn't be much. All right, Russell, new high slightly, but it's already close to its next area of resistance. So I do think this might peter out a little quicker and not have quite as much more of a rally as the other indexes. And we're looking at the 1 minute chart on the Russell, hanging in there pretty good at the moment. Now, bonds. There's a new high yesterday, hit resistance, stopped. Exactly at resistance. Pulling back, minor new low for a couple of days, nothing much. Back into a support area. I'm still looking for a little bit higher. Pardon my cough. But we could be getting stuck here between a rock and a hard spot. Under, say, 118 and above 115.5. So it might bounce around in here a little bit. That's about the best I can say for the moment. And we almost have an outside down day in notes. It could bounce, slip back down to support and then get caught in a little trading range also. I don't see anything wrong with that. Remember that both the 10-year notes and the bonds, in particular the 10-year notes, seem to have very broad, year-and-a-half in size, double bottom formations, which they both need a significant amount of rallying in order to break out of that pattern. It's extremely bullish long term. I've talked about it for, frankly, months. So far, so good. The last low of any consequence, we have a bullish engulfing in crude oil. Now a big retracement is getting oversold for the first time today, and we are right back up to about unchanged after being oversold. There's a chance that this today could be the low day for the moment. I wouldn't be surprised. It's a pretty decent bounce back. I don't think we're going to have a bullish engulfing. If we do, it'll turn green again. Wow. That would create sort of a double bottom. They're not really as close together as I'd like to call it a double bottom, but at least I'd have two bullish signals at the two lows. But again, I need to get above yesterday's high in order to have that happen, which I don't think is going to happen. I think it might be turning up. Next, heating oil. Sharp break, relatively good comeback. Really need to see a little bit more strength. No support yet. No oversold yet. I don't know. This could get between a rock and a hard spot again. And we've got a little sideways, no new high. Too bad. Natural gas. Please remember that the previous head and shoulder top and natural gas worked great. And it had a little bit more follow through. And that was just the low on April 24th, just a few days ago. So short-term strength could easily be developing. I'd like to see another minor new high. Right now we're up on the day almost $1. Almost 10 cents, 0.099 on natural gas, and looking okay. I think we're going to see a little more strength. What about this break in gold? Now we are well below the low of my last ER sell signal, red, on April 25th. This is working great. Not only that, but we also had a rally the next day so that ER3 would sell short approximately in the middle of the range of the bearish engulfing, red bar, within a few days. So we would have sold short. Next day profit, more profit today, a lot more. Doing well on both the ER1 scalp and the ER1 overnight and the ER3 overnight. The ER3 scalp probably lost a little bit. Next, silver coming down. Oh, wait, but gold, sorry. How far down is that? Oh, we're almost to my first objective, which was a 31.96-ish. So we almost reached that. So the next one is probably, as I've been saying, I'm sure, down to 3,005, maybe 3,000 silver. I think it's coming down to 31, or yeah, and maybe even 30.30, or even a little lower. So I'm simply watching for oversold conditions and how it handles the support areas when it bounces off of it. So I'm looking for at least a test now of 31.000, basically. Next, platinum, also a minor new low for a few days, did not get overbought, simply got into a mess of resistance, huge trading range area, big sideways top or bottom building, something like that, long term. So I'm not going to be surprised to see it dip down to 950 and even 930. Chance of it being a little lower. Next, copper's resting a little today. Like I mentioned yesterday, got down too much, too fast, too quick. So I think we're going to have maybe even 1 or 2 more days like this, where it tries to go up maybe a little bit, but not higher than yesterday's high. And of course, if it gets lower than yesterday's low, we might have another leg down pretty fast, which I think is going to happen, but not necessarily immediately, soon. And I do think getting down to 41.17 is not out of the question. Next, grains. Are we building these head and shoulder bottoms or not? Well, today's a rally day in soybeans. That's nice. But I really need to see it close above 1068 to start with. Then we're going to start to attack the neckline at 1106. Then, if we cross the neckline appropriately, sharp rally, 1 or 2 days, high volume increase, normal breakout, retracement toward, but not necessarily back to the neckline, and then new highs. My upside objective is going to be 1240. Going to take quite a while to get there, but that's the minimum upside objective on this very large, starting last August, head and shoulder bottom potential. You might also call it a double bottom, but it really doesn't change the upside objectives. Next, the double shoulder, head and shoulder bottom in soybean oil is now looking a little bit better, and it already tested the neckline just a couple of days ago on April 25th, pulled back to support, held yesterday on a close, dipping a little bit into it, again dipping into it a little bit this morning, but we're now higher than yesterday's high, starting to work its way toward that neckline again. This could break out real soon. Remember, high volume probably. I don't watch volume usually, don't mention it very often. But big rally day, strong rally, major breakout, obviously. We'll see what happens. Coming up soon, I think. Soybean meal is managing to do a lot of nothing. I'm waiting. But there just isn't anything that looks particularly bullish about this damn chart. If I was to look at this independent of all the other grains, for example, I'd just say lower. I have to. I'm not supposed to care what the others do, but it does have an effect. All right. Corn, up a little today, double low, double bottom, started to work, pull back into support a little bit. Let's see a new high. I need to get up to $5. The next move up is to the neckline, about 525. And then you know what has to happen after that. Sharp rally, retracement, new highs, minimum long-term upside objective 640. Let's watch this carefully. I'm starting to turn friendly in corn, long term. And we got a bullish engulfing like I was hoping for yesterday in wheat. Now, this is at the lowest low for the trend since the beginning of the war, 3 years plus ago, at incredibly higher levels than we are right now. So I'm talking about way prematurely this being a low that might go down as a low for weeks, months, and many months to come. I think there's a chance of that. Your long-term momentum is slowing down. Having a buy signal, my ER signal at the very bottom of the market is not unheard of. I can't tell in advance whether this is going to be it or not, but if I don't say something at the time like I did yesterday, then I can't tell people that I called it at the bottom long term. What I need now is a close above 570. Then obviously above, let's call it 590. And then finally the major breakout is going to be above 635 or 642. Let's see what happens. I'm bullish on wheat. Cattle has a bearish engulfing yesterday, opened higher, but not above the high of the sell signal, which is still good, not doing us any good, except if you sold short and around the middle of the range of yesterday on the opening this morning, which is what our strategy absolutely does, you would have gotten filled at the high of the body up here around 210. And your current position at 209.27 is looking pretty good for an ER3 scalp and the beginning of ER3 overnight, because this is the first day. Now, the ER1 overnight is hurting a little. You're short probably about where we are, if not just a hair above. Let's see this go down. I have to be bearish because of the signal, and it could be yesterday's the day of the turning point. It did stall out around this bullish resistance line. Let's see what happens. And 3 days ago, we got a sell signal in hogs. It's working. Today we tested yesterday's low, which was the lowest low since the sell signal, which was on Monday. All we're doing at the moment is holding a little support. I'm looking for the support to get broken. And the next move down is going to be, I hope, to 93.20 or even lower without too much fiddling around in the process. Next, buy signal on the bottom. Shell. Here's my four different stocks. Off a little, basically a doji, not quite. Did get higher than yesterday's high by a very small amount. I don't know. I think we're coming down to close the gap. 63.40-ish, and then up. But I'm not sure about that. At least 63.40, then we'll see what happens next. Also, 1.5 for Apple. Come down, close the gap. We're bumping against resistance, trying to close and successfully a little bit of this old gap on the way down. So a rally first up to 216 wouldn't be out of the question, but then I've got these two gaps below the market to also close. So I'm not sure which is going to happen first. Right now, it's obviously trying to do something on the upside, but we're down $0.50 at the moment and in an area of resistance. Next one is Tesla, and they got one more after this. Did stop rallying at resistance, a previous high, pulled back a little bit, not much, staying above a previous bear trend line, looking relatively stable at the moment. Did not get overbought, but very, very close. If we have a dip here, I think it'll hold, but I'm not sure there's going to be a dip. Oh, there it is. There's a small gap to close at 242.60-ish. The exact number is 242.79. That closes the gap. Not that that's terribly important, the exact number. As long as you come super close, a nickel, dime, 20 cents, or maybe overshoot a little bit, that's probably good enough. I've seen many that do either one of those, and very few that close the gap almost exactly. It's usually very, very close or a little bit extra. So that could happen first. But I like the way this is trading, building a trading range after being oversold back here. Support basically held. You got a triple low of sorts. I'm allowing for a little bit of a dip to close gap back to support and then up, but basically up. Next. And the last one, first time I'm showing this, I was asked to take a look at this morning. There was a classic head and shoulder top that had its first shoulder on an upside exhaustion gap on October 31st of 24. Classic. Came down, tried to close the gap, didn't do the job completely, went up to a new high, and at that point got overbought again, and then pulled back again. no new lows, just a kind of a pullback. Then on the last rally up at about the right time and almost exactly at the right price, it started to turn back down again. And all in about one day, it went up, couldn't hold it, went down to the neckline, crossed below the neckline, stayed below. Now, the next day, it did bounce up a little more than you would expect above the neckline slightly, but the close was below, and it was sayonara after that. Bye-bye. I did have a false buy signal, but it went down to its minimum objective, so that's over. That worked great. But that formation is the head and shoulder of a larger head and shoulder top, I think, in development. The top of the market is a bearish ER sell signal to the exact day, February 19th. All the way down to new lows, but no follow through. And a giant bullish engulfing. Too bad we weren't oversold. Boy, oh boy, were we close. If that had touched 25, then we'd have a giant bullish engulfing green. Too bad. Up to overbought, plus a gap up today. Looks to me like exhaustion strength. It's just a little bit, maybe a week earlier than perfect timing, but that's right in the ballpark. And the price levels in the ballpark also, almost the same prices over here on the left. November 25, 22, November 22. Is that it? 25. Okay, anyway. So time is approximately correct. Price is very correct. And if we start to slide, we're overbought. That's going to look like a shoulder to me. You guys have a great day and profitable trading. Thank you very much.